please take the roll call.
Yes, trustee Mishu,
Present.
trustee McMahon,
Present.
trustee Worse,
Present.
trustee Martin,
Present.
So we got a quorum.
yes, you're all set.
Okay. Thank you. I'd like to remind meeting participants to please leave your mic muted when you're not speaking. I'd like to introduce the first agenda item on your tab 1, and actually would turn it over to Denise to talk about the UM Department of Athletics and agreed upon procedures report.
Yes, the NCAA agreed upon procedures report is performed annually. This is a requirement of the NCAA, who sends this agreed upon procedures manual directly to the auditors. So the auditors use this manual to conduct their audit. And I have provided a copy if anybody would like to see what the manual entails. The process begins by acquiring the data needed to create the expense and revenue report. There are 2 reports that are requested. First one is the expense and revenue report, and the second report is a scholarship report. I request this data from Benny Vinoff, who is the Associate Executive Director of Business Supports and Services at UMaine. The data is separated into 2 separate spreadsheets to make it more manageable. Once I have received this information, I send it on to the auditors. And currently our auditor is Witham, Smith and Brown. I use this data and enter it into the spreadsheets to the NCAA spreadsheet. And this spreadsheet was created to coincide with the NCAA report that I file online in January. There are many different categories that this spreadsheet is divided up into. Its ticket sales, compensation, direct institutional support, to name a few. The next step in the process is to copy and paste the data into this spreadsheet into their onto the tabs that they are related to. And the totals are according to the sport and non-program specific and or account. These summations are carried forward onto a tab that sums all of this information. And it sums it, of course, by sport and NPS non-program specific. And I just wanted to give you a few of the examples of non-program specific. That would be game day expenses, facility expenses, athletic training expenses. Once this spreadsheet is completed, and the totals are verified, the spreadsheet is then sent to the auditors. The auditors use the compiled data from the spreadsheets to randomly pull transactions. This list is then forwarded to the finance director. The transactions are delegated within the athletic business office. Once the finance director receives all of the required backup documentation, they forward it to the auditors for their review. And I've provided an example of what a request from them looks like. There are certain reports also that I have to request from across campus. And to name a few of them, it's the foundation, which I request from Kevin Frazier, and a capital project I request from Paula Shannon, and payroll reports from, of course, payroll. And there's a few other reports that I request. And I have them send these reports direct. I want to keep the integrity of the data good. So I have the auditors send those reports right directly to the audit firm and CC me on it. And once the tabs are completed on the spreadsheet, and the auditors and the requests are made and by the auditors are completed, an in-person audit will be performed. This is when we can address any questions that the auditors might have concerning the data provided to them. If satisfied with the information, an audit draft is sent to the finance director. Then the finance director then takes this audit draft and compares it to the spreadsheet to make sure everything is good. And if everything is good and no edits are needed, a final draft is made. The audit will send a final copy of the agreed upon procedures audit to the president's office and the athletics finance director. This brief overview of the process for completing the NCAA agreed upon procedures audit. Also note, this audit is specifically performed for the intended purpose of compliance with the NCAA. This is not a good representation of athletics finances. Upon completion of the FY24 NCAA agreed upon procedures audit, it was stated that there were no findings. I have a copy of the letter, if you would like to have a copy of that. Any questions?
Thank you very much. Are there any questions from the committee? I don't see any. Okay, well, thank you very much. Really appreciate.
Thank you for your time.
Great. Moving on then to tab 2. I guess Brenda and Michael will be presenting the audit, single audit results and the 2025 audit planning. So who wants to go first?
Good morning, everyone. How is everybody today? I'm Mike Johns. I'm an engagement principal at CLA, and I'm joined by Brenda Shear. We do have a presentation. I can share my screen, or I don't know if anyone else has it. It doesn't sound like it, so let me try to share my screen. Everyone see a presentation?
Yes.
Okay. So again, thank you for having us today. What we wanted to accomplish with the time of audit was review the single audit results. As a reminder, the single audit is the audit of what we call major federal grant programs. And that was due March 31st and was submitted on time. And Brenda is going to review the results and the procedures we performed related to that engagement. Then we're going to jump into really today is the kickoff of the 2025, June 30, 25 audit. And we're required to make certain communications to this group as we start, including what our plan is, what an audit entails, what it doesn't entail. Then we'll end with just a couple of industry insights and ask some questions of this group to see if there's anything on your mind that would help us in finalizing our audit plan and our related risk assessment. And if no one has any questions today, rest assured I will reach out to the chairman and have a separate call where we can discuss. And my contact information is also at the end of this presentation. If you wanted to reach out to me on a one-on-one basis, please feel free to do so. So Brenda, if you're on, do you want to take it with the single audit results?
Great, thanks, Mike. So my name is Brenda Shear, and I'm a signing director with CLA, and I oversee the single audit portion of the audits. And I'm sure the business staff would probably agree with me that sometimes the audit feels like it continues on forever since we're looking at the 2024 single audit while we're planning for the 25 audit. So the purpose of the single audit is to express an opinion over the compliance over major federal programs. So when we look at the federal programs, we look at there's a calculation that we have to do to determine which ones are major. And it's based on a threshold. And then also we have to audit the major programs at least every 2 years. So there's a rotation basis. So you'll notice that sometimes we do research and development and sometimes we don't. And that's why, is because of that rotation. And we do a risk-based assessment on those programs. And then we look at the total percent of federal awards, because there is a certain percentage that we have to test every single year. And that's basically the reason why we do the student financial aid every year. So Mike, if we go to the next slide. So the single audit for 2024, we had 3 major programs. The first one was the Student Financial Aid Assistance Cluster. The second one was the TRIO cluster. And then the last one was the Coronavirus State and Local Recovery Funds. So if we go to the next slide. So we did issue an unmodified opinion on compliance over the major programs. An unmodified opinion is a clean opinion. It's the highest level of assurance that we can provide on the compliance. We did have one finding, and it's classified as other matters and a significant deficiency. Before I tell you go on, I want to define a significant deficiency. So in the single audit world, anytime you have a finding, you automatically have at least a significant deficiency, or it could rise to the level of a material weakness. And the reason being is in the single audit world, they say if you have a finding, obviously you have a deficiency in controls, otherwise you wouldn't have a finding. So we're automatically at that significant deficiency, but it did not rise up to the level of a material weakness. The finding that we had was called reporting with enrollment, and the effective dates were not matching between the Department of Ed systems and the school systems. And it was one campus that had 4 students that weren't reported correctly. I will say that this finding is very common within our client base. I would say probably 60% of our clients have this finding, and it's a repeat finding many times. The reason being is because there's so much information that you have to report with this, and there's a time limit. You only have 15 days to do so, and if that 15-day passes, then you're out of compliance. So it's a very easy one to go out of compliance with, just because there's so much to do with the enrollment reporting. And then I'll also say that the Department of Education sees this as a repeat finding many times, and I have yet to have the Department of Education question a school with this finding. Usually they just take a look at what you're going to do to fix it, and then as long as that is satisfactory, they don't ask a lot of questions, and it's usually a non-issue. So if we go to the next slide. So I'm going to kind of pause and ask if you have any questions on the single audit before I turn it over to Mike to do the 2025 audit planning.
Are there any questions? Can't see any hands, but if I'm missing you, please speak up. Okay, go ahead.
Okay. So as I stated earlier, this is the unofficial kickoff of our 2025 audit process for the year ended June 30, 25. And what was CLA engaged to do to assist the university? What we do is we come in once the books and records are closed. We perform various tests, inquiries, other procedures that enable us to express an opinion that your financial statements were prepared in accordance with generally accepted accounting principles and didn't contain material errors. As a part of that process, we are required to gain an understanding of the university's internal controls or the system's internal controls, and also in certain instances test them in accordance with government auditing standards. If we found any deficiencies in those processes and procedures, we would be required to report it to this group during the audit process. I only point this out because we do not express an opinion on the internal control structure at the system. That does not occur in a financial statement audit. At the end of the audit, besides our auditor's opinion, we have to issue a formal letter to this group talking about items such as were there any difficulties in the process, any disagreements with management, anything else of concern that we identified. And if we do identify any deficiencies in the control system that we consider to be material weaknesses or significant deficiencies, we're also required to report that in writing. Brenda just went over the single audit, and that occurs after the financial statement audit and is due again March 31st. So we just reported out on that, and we'll start planning for it as we go forward in 2025. Brief overview of the timeline. Starting now through July, we do perform some preliminary audit procedures. We gain an understanding in working with management if there were any significant new transactions, new legal entities, any changes in the control structure that we need to be aware of to properly perform our audit. We also do some kickoff of some compliance testing in the student financial assistance area. That all takes place over the summer months, and it's not so much weeks at a time, but as information is available and somewhat of a flexible scheduling amongst that time period. But then we get into what we call final field work. That kicks off in September. That's the nuts and bolts of the audit. That's when management has completed their financial close and prepared the financial statements, and we perform what we call substantive testing. And substantive testing are items such as agreeing the books and records to independent confirmations, looking at supporting documentation such as invoices and cash receipts, and other tests that we feel necessary to perform. The financial statements are due the end of October to the state, so they can be included in their financial reporting package. And we're set with management to make that deadline. There have not been any issues in the past with meeting that deadline, and our plan encompasses that deadline again this year. If we did identify anything during the course of our audit that we consider to be of significance, we would reach out to the chair as soon as we're aware and have all the facts and circumstances vetted. We would reach out right away. But if you don't hear from us in that time period, that means we haven't identified anything significant, and we would report out in our formal meeting at the completion of the audit. Our professional standards require us to perform what's called a risk-based audit. So the team at CLA gets together. We have meetings going over what's going on in the industry, in the macroeconomic economy, in higher education. And we also have meetings with management to find out what's new at the system as it relates to business processes or anything else. And then we perform that risk assessment and create a heat map. And what that tells us is, if in our professional judgment, if something were to go wrong, where is it more likely it would go wrong? And where is there less risk that something could go wrong in terms of an error or fraud occurring? And we spend more of those audit hours in the substantive procedure or the final audit procedures on the higher risk areas based on our analysis. That risk assessment is also based on our understanding and assessment of control risk based on walkthroughs and tests of controls. Do the controls seem like they're operating as designed? Some areas we look at when traditionally maybe a higher or moderate risk after we perform that risk assessment, the pension and OPEB, other post-employment benefit liabilities, due to their nature of significant estimate and the need to hire an actuary, and the actuary performs their calculations based on census data of the plan participants. That's generally a higher level risk. Investments, we generally see the fair value of the alternative investment portfolio as a higher risk because they can be more technical, more difficult to value at a period of time versus a common stock that you can find on the internet and look up the value per share. Revenue recognition is always a higher risk area, and this is making sure that revenue is recorded in the proper period, is cut off properly, and properly exists for the year. And we look at revenue in two different cycles. We call it exchange and non-exchange. The exchange is primarily that student cycle, the tuition revenues, the related fee revenues, the auxiliary revenues. Then the non-exchange, the significant portions of that are the appropriations, and then the government grants. And the government grants are a higher risk than the appropriations just due to their nature. Many of them are reimbursement based, and you need to incur what's defined in the grant as an allowable expenditure before you can recognize the revenue. The payroll cycle, that's a significant amount of your total expenses each year. So we perform procedures over the recording of that expense and the year-end liabilities to make sure that payroll is appropriately cut off. And we're always looking for the completeness evaluation of liabilities at year-end, making sure that the liabilities that exist are properly recorded on the general ledger of the system. The University of Maine Foundation is included in the financial statements of the system. They're what the professional standards refer to as a component unit. So they're not consolidated, but they're shown separately after the system's financial statements. Our required reporting to this group is that they are audited by other auditors, and we reference the other auditor's opinion and our opinion on the system's financial statements. we're required to touch base with the other auditors, make sure they have a current peer review report and some other communications and procedures. But the audit opinion on the foundation is based on the report of the other audit firm. There is a change this year, one change in accounting standards that may or may not have a material impact on the system's financial statements, and that's related to accounting for compensated absences. So a new standard came out. It's required to be adopted this year, and it redefines how a governmental entity estimates its liability for any kind of time off that is earned as of year end, that can be used in a future period or paid out in a future period. And the probability defined in this new standard that amount will be used or paid off is a lower one than in the previous standard. Where we're seeing some impact in higher education is on the sick pay side. That's generally across the industry time that is not paid out at the end of employment with a university or state system. However, if it is, after an analysis done, if it's more likely than not that it's determined employees are using this bank time, then a liability is required to be reported that has not in the past. So it's going to depend on the specific employment policies at the system, and then an analysis of looking back a few years and saying, is it more likely than not this time is being used, to see if it will have any impact on that liability calculation as of fiscal year end for the financial statements. I heard some comments at the beginning, and we're all living in very uncertain times right now in the higher education industry. Moody's puts out a report every March on their outlook on the industry, and they downgraded their outlook to that of negative, and they gave 6 general overall reasons as to why they included the downgrade in their report. They're listed here on the slide, but they're referencing items such as if that 15% cap on indirect cost rates for certain federal grants, obviously less funding for research programs, cuts made in the Department of Education. There's question, will that cause some inefficiency, or that would cause some lack of guidance? The student financial aid program is a very, very complex program. We're given a playbook each year by the Office of Management and Budget that tells us what the federal government wants us to test in their federal grants. And I believe that the student financial aid is 96 pages, and that's not even all the rules. That's just what they want us to test. So Moody's was pointing to, if there are cuts, could there be some disruption in the administration of that aid? The proposed endowment tax being significantly increased, and just an overall fear that federal funding could be cut in the higher education space. Then lastly, just talking about macroeconomic conditions that would affect any industry, including increasing expenses for a variety of reasons, and potential volatility in investments that we're seeing early on in calendar year 25. There's a concern about administrative burden, especially as it relates to that student financial aid, if there are more significant cuts, or if the administration of that program is transferred to another federal agency. There's just uncertainty, as I started with. Who's going to answer the questions? Who's going to administer the aid? How are those new policies and procedures going to work? So, and there's fewer career professionals to administer SFA at the same time. So uncertain terms in that uncertain times in that space. And then the enrollment cliff, that's not new news, but just again, especially in the Northeast and Mid-Atlantic, we're dealing with smaller classes of high school graduates in a lot of areas, at the same time experiencing some inflation and shifts in labor. It can be difficult in certain areas to staff management positions that have the appropriate skills and knowledge. So that's what we're seeing as a very brief blip in a very brief slide in the higher education industry. If you want it more, we do have some webinars on our website. Just a couple of weeks ago, we talked about the changes in with the administration and the impacts on higher education after the first 100 days of the new administration. Our professional standards require that we ask certain questions of this group, which again, we'll do now, but if you want to reach out to me separately, please do. And I will have a call with the chairman later on this summer to have a more focused and detailed conversation. But we like to just offer the opportunity. Are there any areas as it relates to the financial statement audit or the audit of federal compliance with major programs that anyone maybe has an area of focus they'd like us to look at when you were looking at interim information? Did anything pop as being different that you'd like the auditors maybe to take a harder look at? Any significant litigation out there that could cause potential liability? And then, of course, fraud. We always ask if you're aware of any fraud that was brought to governance that we need to be aware of as we perform our audit procedures. So I'll pause there for a second to see if anyone has any comments. And again, if not, my contact information is at the end of this presentation.
Thank you very much, Mike. Appreciate it. Just a couple of questions. I know it keeps coming up when you look at the single audit report as far as where there might be internal control weaknesses. Like for instance, what was the root cause of when you look at reports pulling wrong program dates, considering control designs and flaws or operational lapses? When you look at the where is that on the students there reporting? I mean, should that be done? For instance, or could other University of Maine system campuses face the same NCS reporting risk, or should this be addressed at the system level rather than at the campus level?
I'll let Brenda speak to that, but I do believe our finding was related to one campus, if I'm not mistaken. And so if the other 6 are reporting this properly, it sounds like we have a pretty good template of controls that maybe we can help out. But I'll let Brenda speak a little bit more on that.
Yep. And on that, Brenda, if you could, when you look at manual fixes, are auditors comfortable with manual corrections done on the SC website, or are there risks that those may not be adequately tracked or audited?
So the NSLDS enrollment reporting, it was at one campus, which was Farmington. And I'm guessing it's probably maybe based on the number of staff that they have. Usually we see this finding when there's less staff and the staff they have more duties that they have to do. And as I mentioned, it's a 15-day. Once you get past that 15-day, if it's not reported correctly, then it's going to be an issue. And getting that information to pull all of the information timely in that 15 days is probably an issue. But we would have to talk to the campus itself. They do have a remedy. They have what they call a corrective action plan that they have in place that they're working towards. So hopefully this finding will go away in the future. And I will comment that we have had this at other campuses in the past, and they've been able to put in corrective actions. So maybe they can work with one of the other campuses to make sure that they get all their ducks in a row so they can report timely and accurately.
Okay, thank you. Are there any other questions? Not seeing any. I'll turn it back over to you, Mike. Have any?
Those were the end of our formal remarks. We'd be more than happy to answer any overall questions besides the last slide I was showing that asked specific questions. If not, we'll hang on till the end of the meeting should anything come up.
Okay, great. Thank you. There are no other questions. We'll move to tab 3, UMS Enterprise Risk Management.
Thank you, Chair Michaud. As part of our ongoing commitment to institutional resilience and strategic oversight, I'm pleased to share that we're revitalizing the University of Maine System's Enterprise Risk Management Review Framework, often referred to as the ERM process. The ERM process has helped us keep our operations aligned with the strategic plan and unified accreditation, and it's a vital part of our risk management program. Due to the significant disruptions brought on by the COVID-19 pandemic, as well as subsequent leadership transitions, our regular ERM review cycle was understandably interrupted. So today marks an important step in reestablishing that rhythm, and I'm pleased to formally introduce Nate Anaya, who is our Director of Risk and Safety Management. Nate now leads the system-wide ERM program and provides a fresh perspective and leadership to this work. So given that it's been some time since our last review, and that we have also new board members, Nate will walk us through the methodology we use for assessing enterprise level risks, followed by a high-level overview of what we currently track across the system. So with that, I'll pass it over to Nate Anaya.
Good afternoon. Thank you, Gretchen, for the introduction. And yeah, I'll be going over the enterprise risk management process that we have. So just before we get started, I just wanted to just kind of, provide the book definition of what enterprise risk management is, just so that we're all on the same page as we go forward. So it's the enterprise risk management is the organization-wide process that helps us identify, assess, and manage risks that could negatively impact the University of Maine system's ability to achieve its goals and objectives. So it's a great process to use, as it encourages collaboration, and it's a proactive process by nature, and encourages a risk-conscious culture throughout the organization. So all those are good things, and the more people that are focused on risk and safety is a good thing from my perspective. So as Gretchen mentioned, we'll spend some time talking about the methodology, how the tool we use to score risks that have been identified, the risk matrix, and then we'll spend some time looking over the register, the risk register, and finally we'll finish up with discussing our final next steps. And if anyone has questions, please feel free to jump in at any time. So the risk assessment, the methodology, it's really, although the topics that are identified and included on the risk register are high level impacts to the organization, the process is no different than doing a risk assessment, in any part of any area of the work at the organization. So it starts off simply by identifying the risk, identifying the scenario, the potential situation that could negatively impact the organization. So that's step one. The next step is to categorize and assess the actual risk. So we do that by looking at the severity and probability. So I'm just going to jump ahead to the next slide and take a look at the scoring matrix. So we identify the likelihood that the risk could occur, and the potential severity, the financial impact that the risk could have if it occurs, and simply multiply those two numbers, and that gives us the risk score and allows us to categorize it as low, moderate, or high level risk. So the one change that we made to the risk register and the scoring matrix is we changed the probability criteria. We changed it to time based versus percentages. So there was a range of different percentages. The rationale behind that was, just a little bit easier to conceptualize, the likelihood that could happen over time, and we could potentially use historical data in the event that a risk does occur in the future. So after assessing the risk, the next step is to consider the control measures that would be used to ideally prevent that risk from occurring. However, if it did occur, what control measures are in place or could be put in place to mitigate the impact. So that's the next step. And of course, along with considering, then actually implementing, and finally monitoring the success of those controls to either prevent or mitigate the risk, and making adjustments as needed. So that's the process. It's an ongoing process. It's a cyclical process, and that continues until either that risk is no longer a threat or controlled completely. So. And just a quick word on the risk type. So once we've identified the risk and in adding it to the register, we assign it a risk type. So the 5 different categories that we have: operational risk, so the day-to-day potential day-to-day impact. So for example, compliance, completion and documentation of compliance training amongst the staff throughout the system. An insurable risk, an example of that being property damage that could occur on account of a natural disaster. So this is risk that we could pass off to an insurance company. So we hold various types of insurance. The financial and compliance risk types, risk that would have a negative impact financially and potential negative impact to the reputation of the institution through potential noncompliance with federal or state laws, for example. Workforce and talent risks are concerned, how we attract talent, how we maintain and retain talent, how we train people, things that typically fall under the HR umbrella. And then finally, strategic type risk. So these are those long-term potential risks that could negatively impact the institution. For example, deferred maintenance to our facilities would be an example of that. So this is the register, and we'll take a closer look at the actual risks here in a second, but just wanted to pull this up just to give you an idea of kind of what it looks like altogether. We currently are tracking 21 identified risks. 10 of those are low-level risk, 10 are moderate, and 1 is designated high. So just for the purposes of this discussion and presentation, I just took all the risks and just organized them by the committee that is working and that has identified these risks and is working to implement the controls. So we'll just go through this. I don't want to read all. There's a lot of information on the next few slides, and I don't want to read all that. But just the ID comes directly from the risk register. The description is, of course, what the risk is. The measure is the risk score, and I just thought it would be helpful to kind of show the math, how we got there. And then the risk type and the management locus of control, that being the person or the office that has the authority or the controls the resources to help mitigate or prevent that risk from occurring. So the Academic and Student Affairs Committee is tracking six risks. There's 3 on this slide. And if anyone has any questions, and just as a reminder, these the list here represents the risks that were identified originally, and this is what we'll be working to update and make necessary changes. And I'll move forward to these are the controls that have been developed. So the bold is the risk, and then there are quite a few different types of controls for each one of these. There's no single solution. It's best when there's a multi a multifaceted approach to try to address these different risks that have been identified. And just move along to the Finance, Facilities, and Technology Committee risks. So the first one here is the deferred maintenance and long-term capital deficits. That's the one that was scored the highest throughout the risk register. So that is the high risk that we're tracking. So a pretty diverse group here. And then to continue on with the 8 total that the FFT committee is tracking. And again, a wide range of control strategies to address these, ranging from risk and safety management's, my department's ability to contribute some control measures, planning, emergency command structure for things like natural disasters, FEMA grants, a wide range of different control strategies. The Human Resources and Labor Relations Committee is also tracking 6. Here's the first 3. And the next 3. Their control strategies. And these were the control strategies. I tried to boil down. Again, there was a lot of information to include, so I just tried to boil down, to get it down to a kind of a digestible piece, just for the purposes of this. But there's obviously a lot more that goes into these to controlling these risks. And finally, the investment committee is tracking 1 risk. And the control strategies that have been developed to address that particular risk. Our next steps, the plan is to get together with the committees to review the risks that have been identified and determine if any updates need to be made to the actual risk itself. Is it still relevant? Do the control measures still work? Do they need to be updated? Is the scoring still adequate? Does it need to, move? Has it moved up? Has it moved down? So that's what we'll be looking to do next. And then finally, following up with the audit committee to provide an update on the status and talk about how things are moving forward. So that's the completion of my slides. So if anyone has any questions.
Thank you very much, Nate. Appreciate it. Just one quick question is, are the auditors involved in evaluating incidents, response controls related to public communication or social media monitoring?
Are you asking if risk management monitors that as a risk or?
Yes.
Okay. Nate, do you want to take that one?
Well, so we're not actively monitoring social media communication or that's, I mean, yeah. Sorry.
We do have a risk related to the reputational harm to the university, so it's a broader risk, and that one is assigned to our head of communications and government relations. So we can make sure that we talk to her about that and see if there are control strategies in place related to social media, et cetera. Does that answer your question?
Yep, okay, thank you. Appreciate it, Gretchen. Any other question? President Freddie Mundy?
Yes, thanks. Thanks, Trustee Mishu. I have a question, and maybe it's a process matter that we can come up with some proposals for, but there are significant research-related risks or risks that are tied to our research enterprise, some of which are picked up a little bit here in this version of the register, others of which are evolving and changing. So I'd like to propose that I can perhaps speak with you, Trustee Mishu, and others about how we introduce that conversation into maybe ASA or FFT or both, and perhaps bring some proposals, because I'm not sure how the process works, but because there isn't a separate committee, I'd like for us to at least put those on the table if that's okay.
Yeah, no, it sounds good. Thank you.
And President Freeney Mundy, if there's something that we should be adding to the enterprise level risk matrix too, to make sure that it's kept at the forefront, we're happy to work with you on that too.
It's probably there, Gretchen. Yes, thank you. Let's
Yeah.
talk soon.
Any other questions or comments? Don't see any. So, thank you very much, Nate and everyone. Appreciate it. So now it's executive session. Could I have a motion for the Board of Trustees committee meeting to go in executive session under the provisions of 1 MRSA section 4056A to discuss the evaluation of personnel and the consideration and discussion of appointments, employment, and duties.
So moved.
Second. Kelly and seconded by Dave. Beth, would you call the roll?
Trustee Mishu,
Yes.
trustee McMahon,
Yes.
trustee Martin,
Yes.
trustee Worth.
Yes.
The motion carries. I'll move you into executive session. One moment.
Thank you.
Like skin and cat.